Hey everybody, welcome back to Markets and Sectors Analysis. My name is Mike Fairborn. Folks, last show of the week. Hope you're having a good day. It was a long week in the markets, a lot to look at today, and some interesting indications to finish off the day on Friday for the markets and what that might mean for the potential of a Santa Claus rally, as it's known by a number of traders and investors. So let's take a look at that. But some interesting signs unfolding there. Hello to each of you here. We do have Scott on board. Hello to you, Riceberg. We've got others on board as well. Greg, Will, Dom, Kelly. Great to have you on board. I'm joined in the chat by a great friend of mine, Cameron May. You'll see him in the chat as Cameron listed there, or CM, I'm sorry. I know him as Cameron. You know him as probably here a lot as CM. Folks, you can follow us both on X. Be sure to follow Cameron. Cameron May CS, Mike Fairborn CS. Look forward to diving into, definitely got some markets to look at, sectors as well, not to mention individual stocks. So let's dive into some disclosures to get going here. Information here is provided for information purposes only. Now, Schwab does not recommend the use of technical analysis as a sole means of investment research. Paper money software application for education purposes only. Investing does involve risk, including for some products, more than your initial investment. A look at some of the futures disclosures there, as we do look at futures from time to time. Futures and futures options trading does involve substantial risk, not suitable for all investors. Finally, past performance is no guarantee of future results. So let's go ahead and just share our screen right here and get going. All right, so what are we looking at here? Well, we've got the S&P 500, and this is what we're looking at right now. So this was kind of a little bit of a step up to what I was looking at. We've been talking about it even since last week, folks, a little bit of resistance right there. There's your pullback, the possibility of a bounce. Now, one of the things that we could look at here with that bounce is the possibility of, well, is a higher low. We're getting a higher low right here. That's clearly a higher low. And today, along with it, well, we might. I can't say it yet. We've got an hour left to go basically in the day, but that could be a hold right there. So some traders may be looking for that Santa Claus rally. I'm going to talk about that in just a little bit, but broadly speaking, where do these markets stand in relationship to market posture, which we love to discuss from the get-go at the beginning. So let's do that first. We'll pull this up, look at some of these longer term moving averages, just giving us a general sense of where the market stands right now. We'll also look at a weekly chart too. All right, so we've got a few different moving averages that a lot of traders will look at. Of course, we've got our 200 down here, a big moving average, probably the most common moving average. A lot of traders, investors will say, if we are above that, they're bullish. If we're below it, it's bearish. Now, where it gets tricky is when prices are doing this around the 200, but we don't have that issue right now. Prices are clearly above that level. Next up, on our 100, we're just cutting that in half. How are we doing there? More of an intermediate term trend. So we've got a longer term trend here, more of an intermediate term trend here, and then really an indication that some traders will look at, we just half it again. We just keep cutting it down, 200, 100, all the way down to the 50. And what do we have? Well, we did test that 50, which we have done, and markets will do this over extended periods of time. They have when they're trending up or down. It can go either direction, that's for sure. But notice this bounce over here off the 50. The 50, we did get below it. We closed back up above there. We retested it again one day. And what you like to see, if you're looking for that short-term trend to pop back up, you're looking for it to do exactly what it did here. And that is a quick recovery right back up above the moving average. Let's take a look at it. You can see right there, we jumped right above that level. That gave us an interesting Harami type pattern there. That's when the body of the candle sits inside the prior day's body. Talked about this a little bit yesterday. That's often seen as a sign of a reversal. Okay, we like reversals, and where is it happening at? The 50-period moving average. Now, we don't know if it's going to be a full reversal and go on, but we could say that if we back out of this, like I just showed initially, yeah, there might be a flag pattern developing in here too, just in time for the Santa Claus rally. Now, we're almost there, I promise. I'm going to get to the Santa Claus rally potential. It's not a guarantee. There's no guarantee we'll have one, but traders call it the Santa Claus rally because it has been known to happen, or variations of it have been known to happen in the past. Now let's scoot on over here. Well, we're looking at the weekly. It's always good to get that weekly perspective, and it is fascinating how well sometimes the 10-period moving average can correspond to that trend over really, remember, when we're talking weekly, I want you guys to be thinking about longer term, at least be thinking of the intermediate term time frame, right? Over that, because each one of these bars is not daily. Each one of them represents 5 daily bars. So each time we see it, it's a week. And for the month, yeah, we're looking at about 22 daily bars. So there's a lot going on behind the scenes here. And that trend, maybe you can see what I see. Far left hand side of the screen, I'll just even put left versus right. I'm seeing an upward move. That means up, right? That's an upward trend. And here we are. We are bouncing off of the 10 as well, the 10-day. Now here is your 40. We're clearly above the 40. There was a cross that occurred over here. Some traders will refer to this as like the short-term golden cross. I don't know if I'm buying that. It's short-term, but hey, we're dealing with a weekly chart. So how short-term is it really if you've got a weekly? But the shorter-term moving averages, no doubt. The standard cross is golden cross is a 50 and a 200 on a daily chart. This is really quite similar. I would still say this is kind of a longer term indication and actually a little bit longer because we are using a weekly chart, but we've got that in place. And one of the things you'll note when you go through here is look at the distance, the gap between these two. One moving fast, one moving slower. The gap is pretty extensive, which means that the trend is oftentimes, notice the gap, stays in place for an extended period of time. You know, that's oftentimes indicative of the 10 moving faster than the 40. In other words, the trend is remaining up. But I always kind of find it fascinating when you are able to bounce off that 10 weekly, in this case, weekly. Okay, there are some bounces there. We did dip below, but we got back above it right there. Now, a lot of you guys know exactly what that, oh, I just saw down there, Scott said it. I was just going to say a lot of you guys that Scott nailed it right there. It is a big hammer. It is a big hammer. That's the hammer pattern. Now, technically speaking, if you're looking at the actual definition of a hammer, you've got the body of the candle, but it is defined like this. The wick of the candle needs to be at least 2 times the length of the body. I think in this case, Scott and everybody, folks, were clearly there. You can see right there, the wicks, oh, okay, well, I'll zoom in instead of just circling it. But you can see the wick, the body is quite small, but that wick is at least 3, maybe even 4 times the length of the body. So it's a big hammer. And right now the day's not done, but it looks like it, exactly, Riceberg. It's the MC hammer. Hey, I'll tell you what, Riceberg, it's also got right now too, it's a double harami. You're resting inside this body and you're resting inside this body. I take a little bit more time sometimes, you guys, when I'm looking at the weekly, because we've got a lot going on. Just this alone, that's 15 bars, dailies. That's 15 days, 3 weeks. No, that's 3 weeks. We're looking at 1, 2, 3, but that's 15 days. So when you get it here, it can mean a little bit more. All I'm saying is it can be interesting as we are approaching what's known as Santa Claus rally. So back to that. That's our market posture. We always start off each and every week because it gives us a sense of what direction the market's going so that we're on the right side of the market. Let's go right into SPX right here. I'm going to highlight this and show you guys what is defined as that Santa Claus rally. Santa Claus rally is often the last 5 days of the year. Okay, now I'm going to put a little line down here so you guys can see that I'm actually not fudging, that I'm going to be counting it here. So here we go. This would be this bar, and it does count the bar that you're pointing at. So that's 2, 3, 4, 5 to the last day of the year. We're getting very, very close. Now, does it mean that it has to be exactly 5? No, you can start ahead of that time, but we're really just looking at the last 5 days. If this is the last market day of the year, the 31st, it's a market day, right? And you know what? But then again, we do have Christmas within there. So that's skipped out. That's good. Okay, so it's missed because obviously we're not open. That's 7 days starting on Monday. 7 days. But we're right in that range. So it's like, what over here? 5. for the Santa Claus rally, 5. And then it's the first, oftentimes, this is what it's referred to as, is the first 2 days of January, right here. You got this, there's our 2025 year-end marking line. So you got the 5 days, December, 2 days, January. Keep that in mind because, yes, it could be. In fact, we're seeing a lot of scenarios where we could potentially see a bounce start to arise here. We've got some other cool indications to take a look at before we dive into that. But before I even go there, I did want to just, I'm going to cut to the chase on one of these. I have to. Here is the seasonality. What do we oftentimes get? Look at this. This is funny. We were a little bit behind here on we have a little bit of December dip. Remember, it doesn't have to hold up to what's on average here. You know what? I'm going to bring these two lines together here for us too. When you're looking at 5 years of data in the past, there's a significant price difference, as you guys can see. Let's go ahead and just make this show price as a percentage much easier to see here. But sometimes you will get maybe the cycle coming a little bit early. The question is can we sort of drift on higher like we on average have done the last 5 years, 10 years? Let's do it again. Let's do the 10-year. There's the 10-year, looks very similar. And last but not least, we'll even double it again. There's the 20. That's even more of a drift on the 20. So did we get our dip and we're starting to go here? That remains to be seen. But the one thing we can see, and we can actually even see it from this line, is the possibility of a flag pattern developing right there. I mean, it's mirroring up for it into the Santa Claus rally. The Santa Claus rally would really mean that flag unfolding, though, towards the end of the year. Again, folks, if you're not familiar with this, this is seasonality. It's a great tool on the Thinkorswim platform. You're simply just looking at January, Jan, through December, right? The red line is what on average happens, and I'm using 20 years of data here. We can pull it back as much as we've got, really, to look at this, just to see historical averages. But you could see that it's all very similar here and all very similar with November on average. But this November, shoot, we had a dip, but we had a pretty big bounce back too. So it did end up being an okay November month with that bounce back, basically towards mid-month. All right, again, that was in style up top, chart mode seasonality. I'm just going to scoot over here to standard to pop us back to where we were. Anytime you go in here, you got to make sure that you readjust your y-axis, because right there, we're back into percentages. So let me just come back over here. We'll highlight it, and we'll go right back to our price axis. Take this out, and there you go. Okay, now we're getting some absolute values to take a look at. Great. Now, before we dive into our other kind of setups, let's do this. Let's take a look at the NDX. It's going to be very similar. You've got that listed right there. Pretty strong bounce. You can see a very similar type pattern here. Will it flag? That remains to be seen. The Dow, the DJI, held up, maybe one of the best. Now, it's not a big follow through today, day to day, but we might be still holding near some prior highs here, which is interesting. And last but not least, before we start to go through all these, is the Russell, the RUT. Okay, and the RUT did take out new highs, and oftentimes those those small cap stocks will lead the way, up or down. Now, not every time, but they might be first out of the gates, and that, all else equal, to a lot of traders, they would say, well, that's kind of a positive. We'll see how the follow through is, but the fact that it did make a new high, because did we get that on the SPX, on the NASDAQ? Believe me, folks, we did not get that just yet. We came close. We came to a similar high. The NASDAQ not even quite there. All right. More on getting into the stocks here in just a second. But we've got to take a look at our market and sector review and look at some of these key charts just to see what's going on specifically. And my eyes just, folks, they just gravitate right here every single time because I'm looking at market breadth. Oftentimes when the trend has been up for so long, to keep that trend intact, to keep it going, you can't just have the Mag 7. You got to have broad participation. Because if those are falling down, it can't just hold up everything. It's helped a lot, some of those bigger tech names. But notice over here, we did not get a new high in the SPX. We came close, but in the NYSE, about 2 point, It's about 2.7 as I looked at it, 2.700 stocks in here, a much, much bigger basket. You know what? We got to pull it up to see it. It did make a higher high. We broke even higher. There were more advancers than decliners to make a new high, and we're holding that level. Now, for those traders out there that like market breadth, that's probably going to be a positive for them. All else equal, they're going to say, yeah, that's a good sign. If it's making new highs, if you're looking for that trend to kind of continue going forward. Not too much going on here. I will say this, though, with McClellan Oscillator. Remember, if you go below 100 and then you go below 70, which we did do, McClellan will say 2 to 3 weeks of either a sideways or downward move. In other words, there's a little bit of a reversal potential that could occur here, right? And that was coming up right at this. Of course, we had another one here, another one here. So actually, you know what you got? When we came below that 70, that minus 70, let's zoom in. Between the bigger chart and my fatter drawing tool, I can't even see myself. How are you guys going to see if I can't see? And I've got the screen right in front of me. Now, there's the minus 70. I'm going to straighten this out, too. We're going to try to do just a straight line going up here. Somewhere over here. Okay, this is the range. The general range is here. Now, think about it. 2 to 3 weeks from when we first saw the indication, we got it. We hit it. There's 2 right there, and about 2.5, maybe even 3, and now you're getting a bounce. So we use this as an indication. This is also, though, the indication itself. Again, look inside the indicator so you can see what it's against. Very, very important. It's against that broader basket of stocks. 2,700 versus 500. 2,700 plus stocks in the NYSE. We've pulled down advancers beating decliners. The trend is up. Now, here's another really interesting indication for breadth in the market, and that's using the EW. So it's the same symbol you guys are so used to putting into Thinkorswim and looking at, SPX. Just throw that EW on at the end, equal weight, so that everything in that S&P 500 has the same impact on what you're seeing here on this chart. What do? We hit a new high. That means we're getting broader participation that can help with the trend. I've not ever even thought about a Santa Claus rally with the SPX EW, but it too, breaking over highs and now giving us a little bit of a flag type pattern here could be construed as a positive. Now, I always show this visual because a lot of people are coming in new for the first time. If you look, I'm just in the Market Watch tab. It's a great tool. There's the S&P 500, and you'll notice, yeah, there's going to be some bigger blocks in here, a lot bigger blocks. The S&P 500 is what they refer to as market. It's a market-weighted average, market cap. These are the big companies out there. The Mag 7, NVIDIA, Microsoft, Google. Some people have thrown, Broadcom in there, but you got Apple, Amazon, Tesla, Facebook, right? Meta, that is. You've got them all right here. You've got some bigger names too that also influence, but look at some of these little guys in here. Oh, geez. WTW, PRU. They're very small. With that SPX EW, it is a great way to equalize the playing field, and it gives us a visual sense of market breadth. Is it there? Is it not there? Do we have market breadth fading? What would be really not good is if that SPX EW was making lower lows and lower highs here, as the SPX is making higher highs. That means we have this kind of chasm, this break within large and small cap, and that's not necessarily good for an index. In fact, it can be quite bad. In fact, what you'll see with it is this indicator pop up when you get that chasm between the two. When you get 52-week new highs, 52, it keeps looking like an S. Okay, there you go. 52 highs and lows, 52-week new highs and lows. You get the infamous, that's known as the infamous, those red spikes down below. That is the Hindenburg omen. When that happens, that's thing, market breadth can break. Longer term market moves sharply too. Classic, one of the classic examples you'll find of that Here's a little consolidation in the market. We had a series of Hindenburg omens right over here. Take a look. I'll let you guys look at these here. Okay, what do you see? See that downward trend? We had some spikes. What's worse is when you're getting lower lows and lower highs. Whoa, now you're starting to see what you're getting here is you're getting a fair number of the lows that are starting to make new lows. And if they're making new lows, it can influence that downward trend. And that was a very, very tough year. That was 2022. And that's what we're looking for. Now, it's not unusual to get lows at some of the highs, believe it or not. The last time we had them, it was somewhere over in this neck of the woods right there. Did we get a new low in the market? That's the first sign. We did not get a new low. We did not get a lower low and a lower high on our weekly chart. This is a weekly, 5-year weekly chart. We didn't get it. But if we did, and these spikes start coming up again, folks, that can be something to keep an eye on. It can break that market trend. Okay, we don't have that. In fact, we've got the McClellan on each of these kind of holding steady. Now we've kind of bottomed down through here, but we've made some little gains off the bottom when we're looking at the summation index, looking over an extended period of time, averaging it out over a longer period of time. Okay, here is that NYSE highs. You got them over here, but this is actually the this is the actual line of the NYSE. Look at that. If you want to chart the NYSE, NYA, that's a high. We broke above our range. We came back down and we're resting on prior highs, and now we're bouncing a little bit. So a lot of traders are interested in a setup like that. You can see it right there. Resistance, resistance, resistance. Again, support, bounce ahead of the possible Santa Claus rally. That's what traders will focus in on. If they're looking for market breadth, that's a lot of companies within there doing that. Now down below, we're just simply looking at NYSE highs. We did get a new high here as the NYSE made a new high. All else equal, that's a positive. There are still some that are a ways away from making new highs. That dip in November pushed a lot of companies away from their highs. But what this tells me is at least they're making some ground up. They're moving up higher. Okay, we looked at seasonality already, but there it is again. Will we get that December drift up higher, which on average tends to happen? And that ultimately, folks, is that Santa Claus rally. Can you see it right there? You can actually see it. That's like the 5 days right there before. That's what they're focused in on. Plus the 2 in January. It kind of rolls over a little bit to the end of the year, is what the classic Santa Claus rally is about. Now, some traders use that term, others don't, but that is what they'll technically broadly agree on. 5 and then 2. 5 December, 2 January. Okay, now looking at this, what's so helpful is we just looked at the daily chart, but zooming into a 30-day, 30-minute, I've thrown this out here myself because in a lot of cases, you guys, I think if you zoom in on this, if you look at a more minute data set, you're just going to get more bars and you can see more of what's going on. In this case, what do we see? We saw, first of all, we looked at this pretty closely on the chart and we saw a downward move on the S&P. We saw a big down day and then we saw it bounce back up. And now we're seeing the follow through, the possible hold that we had a higher low breaking above the high of the low day. We'll see if we get it by the end of the day. What was that on a 30-minute chart? Some of you guys like price patterns. I do. A lot of my classes, the swing trade class, the ThinkScript class, designing around, potential price patterns. Do you see this one right there? Boom, boom, boom. On a 30-minute chart, that is an inverted head and shoulders pattern. And what you can see there is that can put in a base. No, there's a person. But it can put in a base for an extended rally. There is a price target. I got to get that face off there. It's a little distracting, but this is the standard expectation for the price pattern target. Take the high of the move down to the low. Now, keep in mind, we're still in the 30-minute chart, but it can be helpful here. So they're suggesting, well, if this is an inverted head and shoulders pattern, which we're breaking above right now, so some would say, yeah, it's giving us signs of that. We're breaking above these highs. Take the same range, about 4. It's not quite 4, but that puts us right up near this high territory. So what it's showing here is there's a possibility of at least here towards the end of the year, at least for that intraday. But just by zooming in on that, narrowing down that price pattern, folks, I should say the time frame, we could pull out a price pattern that could in turn help us to see that daily chart even a little bit better. All right, we've got just a couple more of these to look at, and we'll go from there. Let's see. Okay, we've got over here, yeah, this was shared from, Sharon gave us this a while back, and this is just simply, it's a long symbol. That is the whole entire symbol right there. But, if you type that in, it gives us the NASDAQ basically equal weight, and you can see that that is right in line with the NASDAQ itself. It's tough because the NASDAQ does have a lot of tech stocks in there regardless, but it's very much in line. Really, we're seeing it from the SPX EW and the NYSE. And lastly, we can't forget our volume profile, at least on this page right now. Here. Now, when prices spend a lot of time up top or developing at a top, like you've got up here, what happens is you're getting a lot of trades. And the volume profile tool, which is part of the Thinkorswim platform, a very unique tool, folks. You won't see this anywhere else. If you don't have the volume profile, it's just going to be really hard to understand if there's volume behind it or not. Now, this red area, that's the largest volume over the past 1 year. Now, we're a long ways away from that, but let me just state this right now. Getting above that level right there was essential for this trend to really get move higher. You've got to get above these resistance levels in order to get above, in order to trend higher, right? You have to do it. It's a lower price. You've got to get through the lower price before you get through the higher price. So as you look at that, what this suggests is that there could be a lot of really tough sledding through here. It can be tricky to get above. In fact, we went sideways there for a week, and over here, there was a lot of buying and selling coming in. That's what the volume profile does, right? So all this volume that we've got down here is converted into prices. That's what you're seeing over here. I got to remember to repeat this because people aren't seeing this. I know many of you know it, but if you're seeing it for the first time, you're seeing prices at these levels. And so it just gives you that, that horizontal view instead of vertical view of volume. When you break above these points, not in every case, but there can be some sharper moves that occur. And you can see the sharpness of this trend really began to take off when you got above a big volume profile. Now, the next biggest volume profile clearly is right there. That's where it's at. That's the next. This is just the top 10%. I'd say the next top 10% is going to be right in this range. So if we can get above this level, it could start to move according to the volume profile as well. In other words, there could be an extended, more of an extended type of run. We don't know, but that's what traders will look at with that volume profile. Not necessarily extended, but maybe a sharper move. The extension, we just don't know what that looks like, but we did talk about, let's just put it on here while we've got it, using the ES here, the price pattern extension for a bull flag. That gives us more of a projection in price. Again, we are using the ES over here. So this is the S&P 500 E-mini index futures. That's how we get the volume. Okay. Now, one more note on that. I'm going to jump back into our regular charts because we got through it. But look at this. If I go into the ES right now, because it does give us volume, you know what else we've got? We've got a volume accumulation tool already breaking higher. You see it? Somebody's buying in here according to the money flow. Look down here with me, folks. We're at the same price up top. That's the same price as this, roughly. We're almost identical, but that is not the case if we're looking down here at money flow. clearly money flow higher. It's higher. It's breaking above highs. And what that indicates, according to those that use money flow, is that we should be able to take out those highs. Keep in mind what we've been talking about. Could it fall in with a bull flag? Could it fall in with market breadth? How about the Santa Claus rally? These types of things. All right, Rage is joining us a little bit late. No worries, Ray. Late pass is accepted, and great to have you here, as well as all of you that are just jumping in right now. We're just finishing up here with some of the markets. We're going to dive into sectors and sector rotation, seeing some interesting things there as well. I just noticed too in the chat that Cam did post in there. Yeah, we've got a feedback. And if folks, if you could, there's only a couple questions. If you get a chance to fill that out, that'd be great. I read through all those. So too does my manager, Scott. We take a look at those as well. And those are great for topic requests as well. You know, if there's like an indicator you want me to look at or whatever the case is, be more than happy to do it. While you're there, folks, if you're getting value from this presentation, smash that like button. It just lets me know that this kind of information is helpful. It's useful for you guys, markets and sectors related. All right. All right. Well, with that, let's continue on. We've got to go right into our sector rotation grid. See, so those are markets. Let's look and see what's really moving. Oh, and I'm going to narrow some of these down. There we go. Okay, there's our materials. This is going to be discretionary. That's right. Industrials is right here. So what we're looking at here, let's open up the first box because many of you are not familiar with this. But I'll click on this right here, and all this simply is, oh, I've got to be over here. On each one of these, this is the S&P 500. So all these companies are all S&P 500 stocks. In fact, every one of them is S&P 500, but they're all now categorized in across 11 sectors. So here are all the energy stocks that make up this trend, but it's more than just the trend. We have this set up to make it really more sensitive. We've built up the sensitivity factor because we've added in the relative strength indication. It's relative to what? How is energy performing relative to the S&P 500 index? Want to make that point clear because it can play a key role in, trying to see what's moving right now relative to the S&P. In other words, what's outpacing the S&P and what's even lagging behind the S&P. Here is, bottom right-hand corner, our 12th chart. That's just a view of the S&P 500 itself. These companies, okay, these sectors that are moving have been outperforming the S&P, even though the S&P has broadly still been going higher. You can say they've been going even more higher, is one way to say it. Or they could be going even lower than the S&P. What are some of the standouts, folks? Materials. Think about gold and silver prices, right? The actual underlying commodities. Copper is, well, I'm going to throw copper in there, moving up higher, okay? What has energy been doing in the form of slash crude light? Well, we've been enjoying it at the gas pumps, right? I was just in southern Utah earlier this week, driving up through some of these small towns. I mean, those gas stations are all, $2.50 a gallon. Now, I don't know if that's great for the energy companies, but it's great for the consumer. And you can see just the opposite when we're talking about GC up here, the gold futures contract symbol, or SI, silver, or let's do one more, HG for copper. They've been doing okay. Other commodities have been doing okay as well. And you can see the lift. That's, trending off the bottom. That's clearly right now you've identified in these materials. That's a higher high and that's a higher low. Just kind of like we saw earlier with healthcare. It wasn't done on a sector rotation basis. Healthcare really performed well, but that's why some traders will look at some of these trends. But we've got the sensitivity gauge up higher because it is relative to the S&P 500. Financials quite good. Discretionary, really quite strong. What's been failing? Well, going lower relative to the market. Well, technology's been down. And actually, I will paint on here for you the exact opposite. Lower lows and lower highs. Now keep in mind, that is all the technology stocks that fall in the S&P 500 that are within that sector. So you're seeing every single thing there. That's very, very helpful to look at. Here's another one over here. Okay, so utilities down, real estate down, industrials, ooh, just barely starting to move a little bit. Okay. Healthcare too, higher highs and higher lows on healthcare. Staples really has begun to flatten out. And you can see over here, and I saw this a while ago too with healthcare, it began to flatten out too, just before it began to break. Now, is that an indication it will? No, but you could look at some of the companies in there because well, you'd have to say that there's probably a fair number of consumer staples. That's where we're headed next. I want to explore this as an example. And of course, I want to explore what else is moving. Let's say on one of the stronger ones. We've got consumer staples, sticking with the consumer's theme, consumer discretionary. Let me show you how we can pull out and find out exactly what those stocks in those particular groups have been doing. Because, folks, when you get some over, this is what I'm talking about. When we're over here, I'm going to maximize this. Well, we're going to take a look at a couple of these. When you've got a lot of companies, we're dealing with 500, and they're all parsed out into these different areas. Within staples, you can see there's a little bit higher low. You get some similar, close to similar highs. You got to imagine there are some companies that have broken out, and maybe they're retesting. Now, some are laggards, but you might find some interesting things. If we go back one to our discretionaries, this is already kind of broken out over here. Some might be lagging, and they might be on the verge of breaking out. So it's not so much just seeing that, oh, these have already shot up so much, because sometimes, there's a lot of companies in here that might not have so much great potential. They've already run up a lot. But what's also within that group that could also kind of run with the sectors? That's what we're going to do right now. We're going to go to our scan tab here, and we're simply just going to, this is so simple. We're just going to go right into our, got to be in the scan tab. And there is our stock hacker right there. Now you got to be in the stock hacker sub tab. And then what do you want to scan in? We were looking at the S&P 500, and I want to stick with those for sure, because I want to look at the exact companies that made up those charts. Public 500. Okay. Now we're just going to simply intersect that with, I'm going to start off first with the staples. Intersect with, so it's only going to pull S&P 500 companies that are within this industry. Isn't that fantastic? What a great tool to be able to see exactly what's making up that chart. Honestly, it's amazing to be able to pinpoint what sectors are moving through the really through a perspective in terms of a rotation, possible rotation bounce, and then pull up the individual companies. There they are. Staples are made up of what? Whoa, we've got industries, folks. We've got sub-industries. That's what these arrows are. Drug retailer, distributor, food retail, da-da-da-da. Down here with beverages, down here with food products. If you just click the top one, we don't care. We just want to see what's rolling in that area, or what could be moving up a little bit higher over the last week or so. Scan it. 36 companies that fall in consumer staples in the S&P 500 that make up this chart. There are 36 companies that make up this chart. See how we've got this narrowed down? What I'm going to do now is I'm just going to simply go over here. This is a 5-day percent. If you guys like the colored one, I can include this ThinkScript. ThinkScripts aren't guaranteed for timeliness or accuracy, but as long as the data is, good data, then, it should follow through with the mathematics of it. I'll just put this in here. If you guys like the colored one here, I'll just share that with you so you have it. Oh, right click, edit, formula, and I'm just going to share. Okay. I'll put that right into the chat for you guys, and you can have this over the weekend to use, or you can plug it in right now. Again, to plug it in too, want to make sure you have it. Go to the setup up top, right click. Left click, open setting, open, Control V, or just paste it in, preview. You can name it. Of course, I name mine what it is, a 1 week percent. And then you'll find it as you go in here and click in any of these columns. You guys have seen these columns all over the place too, right all over the platform. There you go. What's been moving over the past week? Oh, Hershey. Okay. Monster. Uh, Estee Lauder, General Mills, and Mondelez. Well, those are clearly consumer staples. What's going on with General Mills? I just want to pull up just an example. By the way, what's so cool over here too, put in these other columns. Makes for a great assessment as we break down from markets to sectors to stocks now. Look at the yields on here. Oh, I was wondering which one has it right there. By the way, if a company pays dividends, there's no guarantee that the dividends will continue in the future. They can always be cut. But if I'm not mistaken, General Mills might be a dividend aristocrat. They've been raising dividends for at least 25 years consecutively, is what a dividend aristocrat is. You'll have to look that up specifically. But there you have it. Okay, so there's General Mills right there. I do want to see what it looks like. Sometimes, these income-minded investors will look at consumer staples when they have a lot of a higher yield than average for potential bottoms to be forming. This is maybe one of the first sort of attractions. And well, okay, so we saw consumers going sideways, and lo and behold, what do we have here? We have General Mills. Now, it's kind of behind the scenes. It did beat earnings by about 8 cents, it looks like, but that's just an example. Okay, let's hit one also from the discretionary side. I'll show you how quick this is. This is all it's going to take. Go to the top, click on scan, 48 companies. CCL, let's take a look at CCL over here. I guess I could let this load, couldn't I? Yeah, we'll let it load. Let's see what's up near the top of the list. I think CCL, oh, well, yeah, CCL, oh, CCL's in there. How have these been moving? Notice how we spotted that, folks? Markets, sectors, sector rotation, and then scan. There's a weekly chart right there. If that was a weekly flag pattern, well, you say it's a big move today, but some traders that are anticipating this, maybe their expectation is for a much bigger move. So sector rotation can really help us out in that regard to spot what could be moving. But folks, you can look at a lot of different areas, but I have found that to kind of be a little bit more helpful in terms of pinpointing what might be moving, because the sectors collectively are, and you can see like what 48 companies in one, and there could be some interesting companies out there to take a look at potentially. So there is a long-term high over here too. It's always good to look at those longer-term charts as well. All right, so a quick review, because I do like to do this at the end of our discussion too, because we're just about out of time here, but I do like to go into the earnings beats and just see what we've got over here in terms of the beats. And these are the companies right there. You've got Synopsys. That beat by 101%. So it beat its earnings. If you go to the chart, this is over the last 2 weeks. Let's see, here is Synopsys. Yes. Synopsys beat expectations. And if we go to the charts over here, you can see that SYM, what in the heck? Hang on. It was SNPS. There you go. So if you go to the daily chart, okay, maybe a bit of a reversal, but if you point to it right there, it's going to show you that it beat by that 101%. Does that make sense, you guys? Now, I discussed this in detail along with some other scripts from yesterday within the ThinkScript class. If you like these kind of codes, I cover these within that ThinkScript class itself. And let me do this. What I'll do is I'll copy the playlist for you guys so you can see it. And there it is. I'll put it into the chat right now. But it was yesterday's class, and I have those listed if that's one of interest to you. By the way, the scripts aren't guaranteed for timeliness or accuracy. Thank you, Cam. You nailed it. That's exactly right. But there you go. Again, as long as the data is coming in correctly, we should follow the formula, but hey, we don't guarantee those for timeliness, obviously, or accuracy. So you can pull that up. And then let's see. The scripts, by the way, on any of those, anytime you pull up, let's see if I just go into, just do this real quick, just to show you guys where this is at. I have to show you. Stop order. Yes, we do. Okay. Okay. Sorry about that. If you come down below, what you'll find is right down here under more, you can see right here that I will put the scripts. Like that is the there it is, sector rotation chart link. I have that here. It's just right below I'll copy and paste this one in too if you guys want to take a look at this as well. But that'll be posted there. I go into in more detail sometimes on the swing trading class. But folks, the whole goal was to give you guys some value here, to give you a sense of what to look at in the coming weeks, what's been happening now, but importantly into next week. I think we hit that with the markets too. Possibility of the Santa Claus rally. We saw some strength with some of the volume indicators there too. Volume profile, not to mention the possibility of a flag pattern unfolding too. So you guys, it's great to meet with you each and every week. Thank you so much, Cam, for your help in the chat. Again, folks, there is the survey link. Love to have you subscribe to our channel. If you're getting value, smash that like button. Really appreciate it. You guys, hey, have a fantastic weekend. You deserve it. It was kind of a crazy week in the market, but we'll see what happens in the next week. Take care, everybody. See you next time.